We've all seen traders bragging about how much money they made, but how often do they actually show you exactly how they did it? And how often do they let you see the mistakes they made? Today, we're analyzing this trader, Carmine Rosado, who started his day down. First trade, $3,700. Gone. And then ended the day up $12,000 in profit. We're going to do a deep dive on his exact strategy and look at what he did right, his mistakes, and most importantly, uncover his secret for how to go from losing to winning. So if you've ever struggled with turning losses into wins and you want to learn how to take a loss, turn things around, and end the day in profit, you need to watch this.
Ending the day up $12,000 in profit. The first trade that I took was a $3,700 loss. And then the second trade that I took was a $16,000 win. So I'm going to break down both of these setups live in real time.
Awesome. Let's do it.
So the first trade that we're going to see here now that this is rolling live is I did not get a long entry off of 6130 level of demand because I did not see confirmation to take the market long there. So pulling up the pre-market plan, my scenario, I post these every single day in the Discord, was to look for 6130 to 6120 to support the market, to play long, targeting this pink level of supply at 6158. And then 6163, which was an all-time high.
Okay, so immediately you see what? Clarity. I'm always saying this. The easiest way to better profitability is better clarity in what you're looking for. He knows exactly what he's looking for. And we got this whole thing mapped out, okay? So we're gonna start with this first trade, which we're getting into right now. And the setup analysis, as you can see, he's looking for confirmation, right? He has an idea, which is his analysis, and he knows the things that he has to see in order to confirm whether or not to enter, okay? So we'll go through all the steps here. First trade, second trade, how he went from losing to winning, and then we'll break down the tools and strategies, the mindset and the psychology and the takeaways. And then I've got some common mistakes to avoid that I'm gonna add here, as well as today's Trades by Bren challenge, okay? So that you can take what you learn in this video and apply it to get some more of this.
So essentially my plan was, as long as demand held, there was nothing stopping the market to rally up into this level of supply. Now, the issue with this is, as the market was open and as it was trading, we had about an hour worth, as this right now is around 10:30 a.m. Eastern time. We had an hour's worth of just choppy price action. The market was moving sideways. It was very balanced, and I did not see an edge to trade around this. When the market is trading this sideways, where we move in such a tight range, trading inside of this range will just provide choppy opportunities, since the market is balanced, where the market likes to trap both buyers and sellers. I do not find a great edge trading in the middle of this range. Instead, I like waiting for the market to break out of this balance range. So eventually the market gets a breakout of this balance range, and then this is going to be where I first find my opportunity to take the market long. Now, in hindsight, yes, this thing bounced perfectly off of 6130. It was a solid bounce. The market rallied off of that. But as the market's developing, it's constantly leaving us clues or information that we can use to our advantage. As the market is breaking out here out of this balance range and bouncing off of 6130, it would be safe to say that buyers definitely are present in the market. So now my job is to look for an opportunity where I could capitalize on this footprint or these trails that we're watching the buyers leave. So my scenario was to watch 6137.
Okay, so he's got the screenshot here, right? He's got the screenshot, and then we're looking at live footage of the trade here. So he's got his line drawn here at this previous high, and he's saying, I'm going to look for confirmation here.
6133, that if it could hold and be supported, I would be looking to play longs targeting 6147, which now on my chart is a new target based off of selling activity from the pre-market session. So just pausing this replay here. Number one, we're seeing the buyers at 6130. We're seeing the market break out of this balanced range. We're seeing the strong rally up. We have an area at 6147, which if you've seen my previous videos, these levels act like magnetic forces where the market could head.
Okay, now pause. Pop quiz question. Now show me that you came here to learn something and not just be entertained. Pop quiz question. What did he wait for before entering his first trade? Now he just said it. Okay, he just said it. So if you need to go back in the video a couple seconds, look, I'm going to put the pop quiz question right here. Okay, what did this trader wait for before entering his first trade? Put your answer in the comments. Show me you came to learn something so you can actually get something for yourself out of being here.
Came from the previous intraday high, which is now labeled by this green line, coupled with strong positive delta around 61.35 to 34 area from this previous high over here. And pulling up the replay of this data, we could see strong positive delta at the 34s, the 35s, the 36s, and we even see zero prints at the 37s, which aligns with the 37s being the previous intraday high. So just an area.
Okay, so Bobby is saying price activity. No, that is not the correct answer. That's close, but that's not the correct answer. I need you to be more specific.
That we are confirming buyers and now looking to play a retest of this area. Well, the market's going to dip down into this range, and I find good enough confirmation to take the market long at 61.36 with a 3-point stop loss, going for an 11 to 14 point target. It was about a 3 or 4 to 1 risk to reward ratio. Now, right here, we're going to see my entry as the market is pulling back into 61.36.35, where all of that blue positive buying was. I am now in this position long at 61.36, placing my stop loss under the 61.33s, going for a 61.47 target.
Okay, so you have this whole trade mapped out right here. Okay, so we got the first trade. Again, this is going to result in a loss. His setup analysis was clear though. What he was looking for was clear. He knew what he wanted. Okay, so setup analysis done. And this is the answer. Okay, this is the correct answer to the quiz question. Now, the quiz question I asked you was, what was he looking for? What sign, right? What sign was he waiting for before he entered his trade? Okay, it's like his entry signal of confirmation. Okay, and that was a breakout of the balanced range. A balanced range is a trading range. Okay, so he's looking for a breakout of a trading range, right? And let's just say breakout of a range. All right, that's keeping it simple. He got entry long. He got his stop out below that, and we'll get to what happened. He got stopped out here, and this is him losing money. So we're about to watch someone, a pro trader, lose money. So let's watch the right way to actually lose a trade. Pay close attention to this.
Now, speeding up this replay, the market consolidates for 30 minutes or so after my entry. And
okay, so again, his line was here, right? He was looking for a break of this level, and he got a break of this level. And then when the price came back down here, he got long. And then the price started to go his way, right? You see one blue, you see on this candle, this blue candle, which would be green, okay? So that's up, right? But then it pulled back, and then it went up, and then it pulled back. So it's starting to retrace. And right now, he's about to get stopped out.
Something that I really like to see when the market is consolidating or after a really strong bullish move up is on this period of consolidation, if I see a lot of levels of resistance now supporting the market, which essentially is like a break and retest. And on top of this, we see a lot of red selling volume. This usually indicates that there is somebody passively buying the market and supporting this for eventually a strong rally up into our target. Now, this did not occur because as I speed up this replay, the market's going to break this period of consolidation. Again, my stop loss was at the 61.33s. The confirmation was of this trade was simple. Previous intraday high was supporting the market. The market bounced off the 61.30 level. We see strong buying volume on the rally up. And what I mean,
and when he says strong buying, okay, you can think strong buying volume or you can think strong buying. Look at the strong buying, okay? Again, these will probably be green on your chart. They're blue on his. 1, 2, 3, 4 consecutive bull bars. What's a sign of momentum or strength, whether it's bull strength or bear strength? Consecutive candles. This is the easiest to identify sign of strength. So if you're looking to trade so that you can be with the trend, which is the highest probability way of trading, look for consecutive candles. In this case, we have 1, 2, 3, 4, 5 consecutive bull candles, which is great.
What I mean by strong buying volume is all of this positive delta by this blue buying volume, and we could see the blue, the green aggressive bubbles, which indicates aggressive buying. The market pulls back and holds it on aggressive selling volume, which indicates that there is more buying here. Everything aligned for this trade in my favor. This was a great setup, and eventually the market breaks this consolidation range. And fast forwarding this replay, I stop out of this trade for a loss.
Okay, so there's the losing money part, okay? So he just lost money on this trade, okay? Now listen very closely listen very closely to how he reacts. This is everything right here.
Eventually, the market breaks this consolidation range, and fast forwarding this replay, I stop out of this trade for a loss, and we see a strong red candle to the downside, and I ended this trade down $3,700, and it lasted about 30 minutes or so.
Ouch.
Excellent trade, just simply did not work out in my favor, and there's nothing that I could do about it. I don't regret this trade. I don't look back and say I did something wrong. Everything aligned. The confirmations were there. The volume was there. We were holding the previous intraday high. It just simply did not work out, and I can't fret upon it. Now, the issue with this trade was directly after I stopped out, speeding up this replay, the market eventually bounces.
Okay, so pause. Here's your next pop quiz question. Post your answer to this question in the comments. Now here it is, okay? Look at the top of your screen. Why did he consider his losing trade still a good trade? This was his first trade. He lost, I think it was what, $3,000? Yeah, he lost almost $4,000 on this trade, okay? Now, why did he consider that a good trade? How does that make any sense, guys? How does that make any sense? He lost money. Isn't that bad? Losing money is the opposite of what you want, right? Have you ever seen Warren Buffett's rules of investing? His number one rule for investing is don't lose money, okay? So this guy just lost money, so how could that be good? He just said he's fine with it. So my question for you is, why did he consider his losing trade still a good trade? I want you to post your answer in the comments right now. And let's listen again very closely to what he says.
Just simply did not work out in my favor, and there's
Simply didn't work out in his favor, but it was a good setup.
nothing that I could do about it.
And there was nothing he could do about it. Now, what beginning traders have is an illusion of control, okay? An illusion of control. And we got some answers in the comments about the quiz question. Okay, so confirmation and because it aligned with his plan. Yes, that's exactly the right answer. It's because he took the trade according to his rules and procedures. And what is your job as a trader? Is your job as a trader to make money? I mean, that would seem obvious, right? No. Actually, your job as a trader is not to make money. Your job as a trader is to execute your process according to your rules and procedures. Just like you guys are saying in the comments, you follow your process. The magic word in trading is P, process, okay? And he followed his process, and then notice he didn't get shaken emotionally. This is how you see a professional, because they're neutral, okay? So you maintain the process, and here's your mantra. Execute your process, remain neutral. That's it, and that's what he did. And he's gonna, right now, he's gonna shake it off, and he's going to get back in there, and he's going to make some adjustments, which is also the mark of a master, okay? So far, we've got the first trade. We went through the setup analysis. He got that breakout, and he entered long, which we saw, and then he got stopped out, okay? Now, it's frustrating, okay, but he's going to react in a way that works. So let's keep watching.
I don't regret this trade. I don't look back and say I did something wrong. Everything aligned. The confirmations were there. The volume was there. We were holding the previous intraday high. It just simply did not work out, and I can't fret upon it. Now, the issue with this trade was directly after I stopped out, speeding up this replay, the market eventually bounces and rallies up into my target after.
Okay, now that's so frustrating, right? Because look, he was long here. Guys, look very closely at the chart. He was long here, and he considered confirmation of a long position after a breakout of these highs right here. So that's why he got long here. And then his stop loss was down here. And look how far this tail on this candle went all the way down. It's hard to see because it's really hard to see on the chart. But the price, his stop loss was here, okay? And then the price pushed all the way down here and bounced, okay? The tail means it bounced. And then boom, we got very strong buying and a higher low. So basically, he got stopped out, and then right after he got stopped out, the market raced up and did what he wanted to anyways. Now let's see how he reacts to that, because that's tough. Getting stopped out is one thing, and shaking it off, I mean, that's hard enough, I would say, right? Learning how to take a loss is not easy, but then watching the market do exactly what you want and knowing that you were just a little bit too early, God, that's so frustrating. So let's see how he handles it.
After I stopped out of this. So this is around 11:15 or so Eastern time, 2 hours into the market being open, stopping out for a loss, feeling pretty frustrated that I exited this thing for a loss.
Yeah, so we're right here, okay? Frustration of the missed move.
And then it goes to my target, and unfortunately, I had the right analysis, just the wrong timing, and there's
Right analysis, wrong timing. So Carmine, what do you do? Show us what you do when you have the right analysis but the wrong timing.
nothing that I could do about that. But I sat here waiting patiently for another opportunity, and I drew out a level around
So there's your answer. He said two things. Notice he said two things, okay? Two things. Pay very close attention. Nothing I could do about that. So he's not making the mistake of pretending that he could have known what was going to happen. There was nothing I could do about it. That was the first thing he said. Second thing he said,
nothing that I could do about that. But I sat here waiting patiently for another opportunity.
was he waited patiently for the second opportunity. Okay. Now that's the best thing he did here. And this is the secret. Now I said at the beginning of this video, okay, we were going to uncover his secret for how to go from losing to winning. And there it is. Patience. Being able to shake it off and then patiently wait for the next opportunity is the magic formula here.
And I drew out a level around 61.42, 61.41, all the way down to the 61.37s, which this is going to be my next trade now.
So immediately he's already like, okay, shake it off. And where's the next trade? Where's the opportunity? I'm going to be patient, but he's looking at the chart and he's saying, okay, where do I re-enter? How do I adjust? How do I course correct, right? It's not about getting it right. It's about being able to adjust. It's not about getting it right. It's about being able to adjust. That's what the pros do better than everyone else.
Where I was able to get a $16,000 profit by just simply remaining patient and waiting for another good opportunity and not fretting about a loss and not fretting about my analysis being right and me not making profits off of it. So
Patience pays. Put it in the chat. In trading, patience pays. Put it in the chat right now. That's your takeaway right here. Patience pays.
at this point, after missing that analysis to the long side and it eventually breaking out and me stopping out at the worst time possible, I was feeling FOMO of missing this move and I wanted to chase this breakout to the upside.
Isn't that interesting? He's feeling FOMO. Okay, you feel FOMO and you think that means you're a beginner, but that's not what makes you a beginner. He's feeling FOMO. The difference is not whether you're feeling it or not. The difference is how do you react? Okay, so you can feel the FOMO, but the question is, do you act on that FOMO or do you remain patient?
The problem with me is that if the market's coming at or very near all-time highs, it would not make sense to long a breakout. Instead, it would make sense to long a pullback, and that pullback range came around to the 61.42s like I just mentioned. In the afternoon session, I was really watching for an end-of-day rally as long as this 61.42 level could hold, which is a new level that got developed on the intraday perspective.
Okay, so he's looking at higher lows. Do you see that? Because the low is here and then the low is here. Okay, so this low is higher than this low. So we call this a higher low. And then the market made another higher low here. So every time the market makes a higher low, you have a possible long entry, right? Because that's a pullback in a bull trend. So we're on his second trade now, and we covered that his mindset was to reset and be patient. Now that is the mark of a master. And notice he felt FOMO. It's not about feeling it or not feeling it. It's about what do you do when you feel it. That's so important. He was waiting for a pullback, as we just pointed out, and he's going to get in on this pullback, which is his new setup that he's looking for. And these are the three things that he's going to look for on this trade. So let's keep going.
Now, the reason for why watching this pullback at this specific range was as followed. Number one, if you've seen one of my most recent YouTube videos in terms of one of my favorite strategies that I've been using recently, I talk about looking for areas of low volume, which can be seen using the order flow. In this range right here, starting at 61.43, we can see an area of significantly lower volume than average. People call this a low volume node. On top of this, we could see orange and red thicker lines at 61.43, which indicates there are more passive buyers at this range. So my plan was to long a pullback into the 6142s where this activity was, to target the supply zone at the 58s and all-time highs at the 63s, which is highlighted by this chart over here. Now the market pulls back perfectly into this 6142 level. And as it's selling off and pushing into this level of demand that is newly formed intraday, I find enough confirmation to get long, which my entry you can see right there. I'm long 20 contracts at the 45s, going for an all-time high, so about a 13-point target to about 18-point target for 5 points worth of risk. Now, my earlier trade, I traded 30 ES contracts. On this second trade, I traded 20 contracts. I sized down because my stop loss was wider. It was 5 points now instead of 2 or 3. So I'm adjusting my position size relative to my risk. Now, the reason why I have...
That's called risk management intelligence. This is what separates the winners from the losers. Risk management intelligence. If you're Danny Trades, you know nothing about this. But if you're Carmine, a professional, right? He's like, oh, if I have to take a wider stop loss, then what I do is I size down. That's proper risk management. And if you want something to practice that. And it's hard to learn how to do that because you have to be very flexible and adjust, right? When you get your entry going and you're setting that up, he noticed the wider stop loss was 5 points, but he adjusted his size. Okay, so let's hear it again. He usually trades 20 contracts.
You can see right there, I'm long 20 contracts at the 45s, going for an all-time high, so about a 13-point target to about 18-point target for 5 points worth of risk. Now, my earlier trade, I traded 30 ES.
Okay, so he had 30 contracts initially, but then he sizes down to 20 contracts, right? So that's because that stop loss is wider on this trade. Okay, so that's proper risk management.
Contracts. On this second trade, I traded 20 contracts. I sized down because my stop loss was wider. It was 5 points now instead of 2 or 3. So I'm adjusting my position size relative to my risk. Now, the reason why I had a wider stop loss here under this box was because, number one, the volume intraday was very weak. The volatility was very slow. And the earlier trade that I took a loss on stopped me out before it eventually working out in my favor. So in the back of my mind was maybe because the market is balanced or it's moving kind of slow, maybe this thing is going to take time to develop. So instead of going with the hopes of it's going to work out right away, I entered this thing with reduced size, a wider stop loss, going for this thing may take a little time for it to develop, and I can't go in with scalping mentality, which is why I said I positioned myself instead of going for a normal scalp. Now, what's going to happen?
Okay, another pop quiz question. All right, look at the top of your screen. I'm pasting it in right now. Post your answer in the comments. Why did he use a wider stop loss on his second trade? This is his second trade. Notice he used a wider stop loss. Now, why? The question is why? Why did he use a wider stop loss? Okay, post your answer in the comments right now. Show me that you came here to learn something and not just be entertained. This is how you get something out of being here so that you can go and turn what you learned from this video into some of this. Let's go.
Happen here is the market's going to rally. Fast forwarding this replay. Again, I'm in 20 contracts at the 45s. We rally up to the highs. And the reason for me clicking the buy button down here was as follows. The market has a sharp, aggressive, violent move down into this level of low volume. As you can see by the footprint chart, even the heat map, you're going to see a lot of red selling volume. In the video that I discussed this strategy, and also if you're confused with any of these points, I would highly recommend you watching the order flow series that I did on my YouTube. I'll post a link for that in the description of this video. But we see a sharp, aggressive, violent pullback into this level of interest with selling volume noted by all this red selling or these red bubbles into this level of interest. And as the market is doing this, I find enough confirmation to get long. It's also forming new demand here. Going back to the...
Okay, so you've got a channel. This is a bull channel. Okay, bull channel is a bull trend. And what's the mark of a bull trend? You've got higher lows. So the low is here. Now the low is here. So that means this low is higher than this low. We've got higher lows now. And then notice the same thing happened here. So you guys see the pattern. We go up, we pull back a little bit, we go up, we pull back, and we go up. Okay, so it's like that, right? that's a bull trend or a bull channel. Now, every time you get a pullback and you get a strong buying signal, that's a possible entry long. So there's a possible entry long here, but he was waiting, right? And he entered after we got a bigger pullback and then a strong confirmation of buying, okay? So this is a long trade, and this is a simple pullback buy, and this is a setup that anybody can learn how to trade, even a beginner, okay? So there's this volatile pullback, but he's holding, and there's two signs that he's looking for to tell him when to hold, because it's one thing to enter a trade properly based on your signal. It's another thing to look at that trade and know when to hold and when to fold. Very important. So let's listen closely here.
What I was mentioning earlier, we rally up very close to the highs, and then we get a pullback down. Now, at this moment, I'm like, crap, this thing doesn't look as good as it did before.
Yeah, okay, and that's what happens when you enter a trade. This is what happens when you enter a trade. You're going to go, oh crap, this thing doesn't look as good as it looked before. So he entered here. After he enters long, okay, he gets confirmation of 1, 2, 3 consecutive bull bars in his direction, which is great. But then look what happened immediately after that. We got 1, 2, 3, 4 bear bars, reversing all of that price action upward. So the bulls do some damage, but then the bears come back and basically erase all the damage that the bulls did. So if you're long here, you're like, oh shit.
But as I just said a few seconds ago, I'm going with the mentality of this thing needs time to develop, or I can't go in with a scalping mentality, and I need to widen my stop loss because of the conditions that we are seeing and because of the volume is lower and the volatility is lower.
Okay, now I want to give a shout out to Radna because you got the correct answer. Now, the pop quiz question was, why did he use a wider stop loss? And the answer is it's because he was expecting a pullback. Radna, nice work. And that's exactly what happened right here. And he's saying it right there, okay? So what he means when he says patience is pullback, right? Patience equals pullback. If you're being patient, that means you're going to withstand those pullbacks instead of see them as signs of failure. Excellent thing to practice. More patience equals more pullbacks. So if you're going to be patient and use a wider stop loss, know that that's going to be part of what you need to expect so you don't panic out.
Now, the market at this point broke this previous low where I got the entry. And again, because I sized down and had a wider position size, I was able to take in this trade and hold past this previous low.
Because of proper risk management, right? Because he sized down, he wasn't freaking out and sweating himself because he was able to withstand. Now listen, he entered and the price came all the way back to his entry and now he's in a drawdown, but he's like, you know what? I am executing proper risk management, so it's all good.
I would normally stop out under the previous low that forms where I get the entry, but because I got in this trade with the thesis of letting it have breathing room or giving it time to develop and the wider stop loss, I was able to maintain in this trade, and that was the right move to do, and I'm very happy with this. It's something that I'm kind of working on myself because eventually the market rallied, broke above the high a day, some more consolidation, and then eventually we get a strong push up into the target, and I get out of this thing when we come into the all-time highs there.
Amazing. Okay, so let's just do a quick review. So he had this volatile pullback, retracing his entire position and then taking him into a drawdown, which is like, I'm gulping hard when that happens, right? Anyone would be like, yeah, I don't like that. Okay, at the very least, it's like, that's a little bit uncomfortable. There was some aggressive selling, pushing the price all the way back down to where he entered and even further than that. And he had an opportunity to add to that trade, but he did not. Okay, so he wanted to just stick to the plan and be patient, and that's what you need to do, and that's what the winners do that the losers don't. They're willing to be patient and stick to the plan. And then we had a strong rally going up to hit that target, exiting with the $16,000 win. So he first took a $3,700 loss, and then he took a $16,000 win. And guys, notice he didn't size up to get that $16,000 loss. He actually sized down significantly and still ended up with a banger trade and an amazing profit on the day. And the key lessons, as I said, patience pays. I said to put that in the chat. So let's have a shout out to patience right now. So put the word patience pays in the chat, because if there's one thing you take from this video, let it be that. Next, he adjusted his risk and size, which is what we just said, and he had conviction and confirmation.
For a 320 point gain, 20 contracts of 16 points worth of profit, $50 per contract. I traded 20 for a $16,000 profit and a 3-to-1 risk to reward ratio. I would have liked a higher risk to reward, but again, I was more positioned into this trade. And there are my entries and my exits for this. And simple, I should have, hindsight, added to this position.
Okay, so he said he should have added to the position. So that's something he could have done. However, the fact that he didn't, I think, shows strong conviction and strong discipline, right? The fact that he didn't add to the position and take on more risk, to me, is a positive indicator. Although, yes, he would have made more if he added to that trade. But sometimes not adding to your position is the right move to keep your psychology more relaxed.
When it broke the low that I normally would have stopped out at, I should have maybe added to my full size, because when it broke this low, this gave me enough validation and enough confirmation. If you look at the heat map here, here's the first sell-off where my cursor's at right now with the selling, and that was the confirmation to get long there. Now the market broke it, came back down, and there was even more selling volume down here, right where my cursor's at now, as it broke this low. And that was even more confirmation or more conviction that this thing was going to bounce or could rally from here. And in hindsight, I should have added to my full position size, making my profits more and adjusting my stop loss. But that was the trade. My target hit, and I got all out of this trade. And as I'm recording this video, the market now basically is just consolidating more at this previous all-time highs.
Look at where he sold, guys. Look at where he sold. He sold it essentially the very, very top, which is really hard to do, okay? So notice, he had bad timing earlier, but then he was patient and he got back in, and then his timing was perfect. And why? Because he was able to adjust. It's not what happens in the market. It's how you adjust. It's like life. It's not the hand you're dealt, it's how you play it. You ever heard that? It applies in life and it applies in trading, okay? So those are some of the key lessons. And his tools, right? He's using order flow analysis, he's using footprint and delta, and he's using supply and demand zones, and he's using low volume nodes. Those are his tools, and he knows the tools that he uses, and he uses only those tools, and he's not messing around with anything else. He knows what works for him, and he uses that, and he sticks to it, which is what you need to do. Next, let's look at his mindset and psychology. How did this guy deal with that loss? How did this guy deal with that loss? You guys tell me, do you think that he dealt with that loss? Rate how he dealt with the loss out of 10. 10 being the best possible way you could deal with the loss. 0 being the worst possible way you could deal with the loss. What would you rate him? 0 out of 10. I think he dealt with it well, but how well do you think he dealt with it? Let me know in the comments, 0 to 10. Now, he avoided FOMO, but listen very closely to what he said. He felt FOMO, but he didn't react to it. And that's how you trade effectively. Stop trying to get rid of your emotions or thinking that you're going to be able to trade without emotions. They'll be there. It's not about having them or not. It's about how you manage them and what you do when they show up. And next, he was patient. And this is the biggest takeaway from this video. Patience pays. The more patient you are, the more successful you're going to be in this game. Next, his mental discipline was through the roof, right? He's being very clear, he's being very disciplined, and he's waiting, and he knows when to act, and he's acting properly according to his rules and his procedures, and he knows how to adjust as well. So what do you see? On the one hand, you have discipline. On the other hand, you have flexibility. And the best traders, you'll see this, they balance flexiblen. Okay, I just made up a word. They balance flexibility and discipline. In other words, flexiblen. I think we just invented a new word. So expect, put that in the comments right now. Flexipin, okay? Flexibility and discipline is how you win in trading, because if you're too flexible, the market will slap you around. But if you're too disciplined, you become rigid. And like a rigid bridge, what's too rigid breaks. Okay, if you watch a bridge, notice when you go across a bridge, there's some give to it. Okay, so you want to be like that with your trading. You want to have the right amount of flexibility, not too tight, not too loose. Okay. Flexiplen. Now, what are the takeaways? Number 1, accept good losses. Do you know what a good loss means? Or are you just trying to avoid losses at all costs? Because most traders are trying to avoid losing at all costs. And trying to avoid losing at all costs is a guaranteed way to lose all your money in trading. Don't do that. Learn what an acceptable good loss is. And the only way to learn that is to write it down. You have to define for yourself very clearly what a good acceptable loss is. Wait for high quality setups. That's clearly a takeaway from this. And then those wider stops in low volatility. Now, most beginner traders use very tight stops, and he used a tight stop and prefers tight stops. But notice that he was able to adjust his stop after he got stopped out the first time, sizing down and then widening that stop because there was some volatility. And he's like, you know what? If there's volatility, then I'm going to use a wider stop so I don't have happen what happened in the first trade. The first trade, he got stopped out. And notice, if he used a wider stop in his first trade, okay, let's go back to his first trade and let's actually look at the chart. He entered down here, okay? Now, if he used a wider stop, we have to like fast forward in the trade a little bit to actually get there. But notice, this is right when the market's coming down and it's going to stop him out. So he gets stopped out here. If his stop loss was actually down here, then this trade actually would have gone his way after that pullback and he wouldn't have been stopped out and he would have made, I don't know, probably 3 or 4 times what he made and he wouldn't have had any losses, okay? So consider using wider stops. That's a great takeaway. And then maintaining discipline, patience, and I'm going to say, and flexibility, okay? Flexibility, and we're going to say Flexiplan, okay? And we're going to say Flexiplan for the win. Flexiplan for the win. Put it in the comments. Flexiplan for the win. Okay, now here's some common mistakes to avoid. If you are trading these setups, which are pullback setups, this is probably the highest trading setup in all of trading because when a market is trending, the likelihood, if the trend is strong, the likelihood that that trend will continue is very high. The probability on a pullback setup can be close to 90%, which is very rare in trading. So if you want to be able to trade pullbacks like this, here are some common mistakes to avoid. Do not chase breakouts at the highs, okay? He took profits at the highs. His target was here. I don't know if you guys caught this, but his profit target was here because it was an all-time high and he got out at an all-time high. He wasn't chasing to enter at an all-time high. So that's a mistake you want to avoid. What's the solution? Wait for those pullbacks and do not enter impulsively at highs. The next common mistake to avoid is tight stops in choppy markets. And we just talked about that. Consider using wider stops and a smaller position size when the market's moving slowly so that you can be patient and not get stopped out and then see the market go your way. The next common mistake to avoid is overreacting to losses. He did not do that. And that was my favorite thing about this guy in this video because his solution was if he gets stopped out, he did not immediately re-enter. Now that's something I've been working on because that's a problem that I've dealt with. And so I oftentimes will get stopped out and I will enter quickly because I want to overcome that loss. But the correct thing to do is what he did, which is wait for a fresh confirmation. So if you're in a pullback trend, okay, this is a pullback trend. What is your confirmation? I can point them out to you on the chart right now. Here's a breakout. And then here's a pullback. This is your confirmation, a strong bull bar closing on or near its high. So there's your confirmation after that pullback. Here's a little baby pullback. That's a small confirmation. So I wouldn't necessarily recommend entering there, although it is a valid entry because it's a bull bar after a bear bar in a bull trend. So that's your confirmation for pullback buys. And then here, you got a strong buy signal after a pullback. So there would be an entry, right? Because you had a bear bar and then you had a very strong bull bar. And if you entered here, that trade would have actually gone your way after just one small pullback. See, we pulled back and then the buyers came right back. And then you've got another entry here. Okay. So those are your entries, but you want to take the best ones. So usually the best pullback entries are after there's a decent sized pullback, right? Like, look at how this is only two little bear bars, and then there's a bull bar. So the pullback is just kind of tiny and small and puny. That's not a very good pullback to enter on. Here's a good pullback to enter on because you had 1, 2, 3, 4 strong bear bars and then a very strong bull bar. So that shows some conviction on the bears, but then the bulls coming right back and slapping the hell out of them and showing that the bulls own this town. The bulls are like, hey, you come into our territory and we are going to dominate you and send that price upward, okay? So that's what happens there. And that's what you want to look for if you're trading pullbacks. The next thing that is a common mistake to avoid is to trade without a clear plan. You don't want to do that. And this is a common beginner mistake. And trust me, I've made that mistake myself until I learned how to solidify my plans with clarity. Clarity equals profits in trading. So the solution is to define your entry and your stop loss and your target before entering every trade. And you know how I do that? I use bracket orders. Here's my trading platform. I use TradingView. And if you want to try TradingView, I've got it linked up in the description. I highly recommend this platform, and it's the one I use for everything, okay? So how do you avoid this mistake of trading without a clear plan? I've got a simple and easy answer for you. Use this tool here, okay? The long tool or the short tool. This is the long tool because your profit target's up here and your stop loss is down here, green and red. And then this is your short tool because your stop loss is up here, your profit target's down here. And if you use this to enter your trades, let's say you're entering long and your stop loss is down here and your profit target is here. You right click and you click create limit order, and then you execute that order just like that, okay? So that's how you would do it. And we can do that just like that. So we enter that, and now you are trading with a plan, okay? You're trading with a plan, and you have a stop loss and a profit target. So bracket orders is what this is called because you've got your order here and then it brackets them here and here. So that way you are always entering with a plan and avoiding this major mistake. And know that that tool is one of the best tools that you have in order to be able to trade more professionally. The next is ignoring trade confirmation. You always want to see clear confirmation of price before entering, okay? Because maybe you don't use volume, and I don't use volume. And then here's your Trades by Bren challenge, okay? So here's your 4-step action plan so that you can actually apply what you learned in this video. Because my goal with these videos is to make them 10 times more valuable for you so that you're 10 times more likely to actually take what you learned from them and make some more of this. So here's how you do that. You accept the Trades by Bren challenge. Number 1, identify key levels. So here's the first thing you're going to do. You're going to identify 2 clear supply and demand or support and resistance zones. I call them support and resistance. You can call them supply and demand, whatever you call them. Just identify those key levels before the market opens tomorrow, okay? Then your challenge is to consider only trading when the price confirms at these key levels. So that's challenge number 1. Challenge number 2, practice patience. Your challenge is to wait an extra 15 minutes before entering your next 3 trades. Okay? Wait an extra 15 minutes before entering your next 3 trades. And the challenge is to record your results and note if your patience improved your entries. So very interesting experiment to do. There's your second step in your action plan. Your third step in your action plan is to implement wider stops in choppy markets. Your action: next low volatility trade, use a wider stop loss and reduce your position size just like he did. And the challenge is that after 5 trades, evaluate whether or not wider stops improved your results. That's step 3 of your action plan. And step 4 of your action plan is to analyze mistakes. So your action is going to be to review your last 5 losing trades for common errors, just like he did. Notice, this guy clocked $12,000, cha-ching, but he was still looking at what he could have done better, and he was still analyzing things that didn't go as well as he would have liked, and was willing and able to be honest with himself and interrogate his performance, because he knows the more humble, okay, and it takes humility, the more humble he is, the more chance he has to improve. Okay, so you're going to review your last 5 losing trades, which is hard to do, but it's absolutely worth it for common errors. And then the challenge is to share one lesson you learned from this analysis. Okay, so I want you to go post what you learned from this video in the Trades by Bren community. Just click on this channel and click posts and put that screenshot, or at least type what you took away. You can also post that in the comments. If you're curious about how I trade, I want you to go to tradesbybren.com and check out my 3 favorite setups. I've got a downloadable PDF where I'm going to share with you my 3 favorite trades, and I will break down the patterns that I look for, how I set my stop loss, and how I set my profit target so I can get out before it's too late. Okay, so that's tradesbybren.com, and hit the like button if you like the video. Of course, subscribe if you want more. And if you want to check out the tools that I'm trading with, like TradingView and the prop firm that I trade with, I've got those linked up in the description as well. Thank you for watching, and I'll see you in the next one.